Good morning. It's March 9th, 2024. It's the Wall Street Weekly Wrap-Up with your host, John Newquist. A week of not a lot of earnings, but some news, and let's get into it. First, we have to watch Apple, because Apple is the second largest company, was the largest company after Microsoft took a spot. But look at this waterfall. Holy smokes. This is what I call a waterfall. You almost can draw just a thing dropping. 9% lower sales. Remember, we had 4 quarters, then we had a positive quarter, last one where revenues grew a little bit. But this is what everybody's worrying about. We can't even draw the line. It goes off the chart here, but everybody's looking at that bottom of the line. Where is it going to end? 150, maybe? There's a point where you start buying it because the dividend and the guaranteed revenues are pretty solid. You know, they're not going to knock the iPhone out. You know, at least I don't think so. But it is one to watch, and it's affecting a lot of markets. Then we get into our friend Cramer, Jim Cramer. You know, like I said, I knew him back in 1997. You know, or so. He started the Street.com, and you know, he's been around, and he worked for Goldman Sachs. In my old days, I got to do a semester with Merrill Lynch and learn more about it than I ever want to know about stocks and bond selling. And bond selling is what I did. And it means you just call people up and ask them if they want to buy a bond. I thought, well, I'm going to go to college for that, you know. But he's saying prediction March 15th, pretty accurate dates. This next week coming up is going to collapse 25%. So, yeah, Apple, you know, is dropping, and that's a big weight on the market, and then other stocks are going to come. But you know what we're going to do now? He says what I think was the problem I had. He said you might want to sell the stocks in our portfolio. You remember, he has a portfolio club you pay $300 a year for, and then buy back when it's cheaper. But I'm not going to sell. That's mixed messages. See, that's tough, because you know he's now inviting them to time the market, which I disagree with. We buy good stocks. We watch it every quarter to make sure the revenues are solid, the profits are solid, and we're not trading. You know, we'll just suck it up during the downcline and incline. We've done that with, you know, the 2000 collapse. We did that with the 2008 housing collapse. You know, COVID collapse. We're not going to sell them just because the market goes up. It'll get back to the right value eventually. But you know, you got to look at it. If it's a company that's not making money, it's a company that's flat on earnings, those are companies you wouldn't want to probably be in anyway. So I think he's done a disservice by trying to get people to time the market. And if he's right, you know, they'll make some money. But if he's wrong or it goes flat, you know, you sat there and wasted a lot of time, and you might have missed some of these moves. The indicators, I mean, you know, gold, look at this thing. We're at record levels of gold. $2,000 record levels. I mean, that's incredible. Now, silver, remember, got crazy with $50 an ounce, but it'll never get there probably this year at all. I mean, that was hedge fund and the hunts in the 80s trying to corner the market, and it got crazy. I mean, you know, I remember selling all the silver coins I had, buying comic books and paying for school, because it was nuts. You know, getting 26 times for a silver dime, where it was, you know, 2 years before like $2. You know, two times its money. Everybody's watching copper. Copper to me is the indicator market, because if you want to build houses, you got to have copper, and you want to have industry, you're going to have copper. So when it's below 4, housing is kind of flat. Now, they said the demand's high, and I keep on watching these home builders, but right now the interest rates are too high for most people. And of course, everybody's feeling the pain at the pump. You know, $78 from, you know, we were in the 60s a few weeks ago, and natural gas still below 2. I mean, very good. But let's look at the most parabolic commodity, olive oil. Holy smokes! You know, the one retailer or somebody who was on TV talking about it's the most stolen item in a grocery store now. It used to be meat. People would put down the prime rib and everything else. They're stealing bottles of olive oil because this is parabolic move. I mean, you think about it, since 2021, it's almost tripled. You know, 2.7% increase, or you know, 2 times 7x increase. So I feel it, because I buy olive oil, and it's like, instead of $5 a bottle, it's $9 a bottle. You know, going to be out there. I mean, I'm going to use it. It's just one of those little painful things of inflation. But the Spanish crop got hit, and you're going to see a lot of people. You just can't plant an olive tree, snap your fingers, and you got olives. It's going to take years. And again, the averages. Look at this. S&P up 17 times out of 19 weeks. The first time since 1964. There was a little crash around then too, but look at this. S&P. You've been watching in the market, getting your 2 months, 3 months of 0.5% per month. Man, you're down 6% on the market already. Where will this end? I don't know. We were out there before a couple years ago, and it was like 17. By May, it was 17. And it's like at the end of the year, by 30%. We don't know what it's going to do, but we're in the good sectors, and that's all we have to remember. Taiwan Semiconductor increased 11% year to year. Remember, they have every kind of chip, not just AI chips. They got automotive, they got computers, they got Bitcoin mining chips, everything. But look at this chart. This is, when you talk about corrections on the NASDAQ, this is how it's going to go. I mean, when you get up to a certain point where you're way above the 200-day moving average, it's a nice little line here like that, it does come down. It comes down a lot. So 50-day moving average, you can see, is starting to get up pretty high, 45-degree slope. So pricey. I wouldn't buy it if I was looking at it. I mean, we're going to hold it. We're going to hold it through all the things, but if it comes down another $30, I wouldn't be surprised either. It's got to stabilize. It's gone up too much, too fast, and we're doing good. I mean, think about it. If you were at 90 and now you've got 50% increase, damn, that's a lot of increase in just a few months. Tesla, we always watch because it was one of the Mag 7, and it's still Mag 7 because that's originally the coin of it. And but look at the deliveries in China. This is kind of easy to see. It's coming down. Lower highs and lower lows. That's a downtrend. And if the Ford guy that I was talking to said everybody wants the hybrid, then the gasoline, then the electric. A lot of misconceptions, but what's selling hot is the hybrid. 60 miles to the gallon. This is what people want. And this is, will electronic vehicles catch up? I don't know. USA likes the gasoline-powered engine. There's a very, I don't want to say kind of like a love of the gasoline engine, but hybrids are the thing that people want to buy, and they're paying for them. And maybe the EVs not so much. We'll see. But we're seeing China. That's a big deal. Of course, the Chinese are pumping out a lot of electrical vehicles, so they're buying them as an alternative. But it'll be interesting when we get Tesla's earnings, next for this quarter coming up. See if they did any better. He's been cutting the prices, so what we would have looked at as a revenue. Remember, 3% is the number. I don't think they may get it this year. CrowdStrike, one of the few bright, I think 32% earnings. Remember, everybody else in the security software area was giving guidance. Here's another one. You can see it's almost marching up at a 45-degree angle, way too high. Here's a 200-day moving average. So, getting, from 300 and some dollars to 250, I wouldn't be surprised. This is an example of the techs are high, and they are due for a correction. And, would you want to buy on here? There is. I mean, one of the things about security software, because I buy it, it's not like something you want to pay a lot of money for. It's considered a cost, but you get too pricey, you'll go shop to a competitor. So Palo Alto or Oka or somebody else like that, that's the limiting factor. There's not like a Microsoft dominance in security software. And the NIKKEI, we just mentioned it because you don't hit a 10,000 milestone on too many stocks that are watched a lot. And the 225 hit 40,000, immediately dropped back because that's the exuberation. But this is been a solid decline up since November. So again, another area, maybe a 10% correction. The jobs report, unemployment. God, look at this. It is unbelievable, under 4%. When I was growing up, if you could get 5%, that was considered good. But 3.9%, 25 straight months, longest streak since the 60s. And you can see, 2 more months, we could break that record. And then we have the all-time in July 51. So I don't know if we're going to go that high, You know, if everything goes wrong like it does sometimes, you know, might find out we have a summer layoff. A lot of techs start laying off and stuff like that. But techs have been cutting, so I don't look at them as being overly fat with the employments and stuff. And then Bitcoin, another big milestone, 70,000, first time in history, all-time high. Of course, it pulled back. But what are we looking at? We're looking at the Bitcoin miners, because the halving is coming in. Remember, every about 4 years, they have the price of Bitcoin that is mined. So if it costs $7,500 to mine a Bitcoin, it's going to get half the amount. Now you just do the math. Okay, I mine 100 Bitcoins a month. I get 70,000 times 100, but I only cost 7,500 times 100. So, you know, the difference is almost $60,000. So, yeah, if my price goes up to 15,000 to mine at the same time, because remember, we're going to get half of them out, you're still up 55,000. These miners are undervalued. It's one of the few times you can chase the Bitcoins, you can buy the ETFs, but you're going to get well rewarded in the miners. You want to buy the miners before the halving because they get dumped. Everybody thinks, oh, they're going to cut the profits in half. No, they're going to cut the Bitcoin mine. Bitcoin will go up. Here's the numbers in history. Will it hold? I think it will. You know, they halved in 2012. You could have bought it at $12. I remember listening, you know, to podcasts talking about buying it at $10, and you know, it was just hard to find a place to set it up. I mean, it wasn't like today. You can go on PayPal and Coinbase and buy it. You know, you had to set up an account with these foreign companies, and you know, like I didn't even want to do it. You know, because the idea is like I watch people. You can buy stuff in China easier because they would take it. All right, you know. Then 216 went up there. That's a big jump. Then 218 it got up 8,000. So at least a factor of 10. And then of course it didn't go quite a factor of 10, but it's at 68,000. So if it doesn't even go up a factor of 10, let's say a factor of 5, we're still talking $300,000 Bitcoin. Boy, I don't want to make that prediction, but you know, you got to look at this pattern. You got to be in the game. If the price goes up 5x, all the miners will go up 5x. You know, it'll catch up eventually. They're still below the value. Remember, everything they have, let's say they have 10,000 Bitcoin. At price, it's 70,000. It's a lot of money. You know, these miners just have all these electronic circuits. They're cutting energy costs. They're adding more material. They're adding more mining capability. It's not going to be everybody's going to mine the same Bitcoin every month. They're going to try to increase it because it's going to be worth more. You know, it doesn't take much. You think you got $7,500, and I promise you, when you get done with one mine, Bitcoin, I'll give you 70,000. Everybody be on it. That's what we're running with the miners. They sell a lot of the Bitcoins to keep and pay for the expenses, but I really think the miners are underhalf. And I would not be surprised if you bought it at $12 for RIOT, because RIOT's a good company. I mean, you know, there's like 8 of them, 10 of them. I think a year from now we'll be looking at RIOT at 24. That's my prediction. You can double your money. And then APGE, I mean, positive phase 1. Remember, phase 1 is just so early. But dermatitis and inflammatory diseases, man, this thing popped. I mean, you know, not quite doubled, but it got there. You know, it's almost 90% jump. Then it caused a share offering because they're going to raise money. So $59 times 350, that's some serious money. And $15 billion, $18 billion, whatever it is, will fund them for a long time. But good stock. Was one of our biotech stocks that we bought, and it's done well. And then we take a look at our heat map again, year-to-date heat map always. Microsoft up. Look at the bright 3 shiny stars. Okay, Meta we don't have, but Novo Nordisk is not on this chart. Novo Nordisk, their pill version passed phase 1, so it's going to be good if it passes to phase 3. Like the Novo Nordisk guy said, the demand is so high. We welcome competitors because we can't keep up. We're going to open another factory. We won't keep up. Good luck for Lilly. They can't keep up. You know, you got to have GLP-1 stocks and stuff. And of course, NVIDIA up 76%. What we don't see is ARM, who's up similar to that. You know, they all talk about super microconductor. It's not that big of a company. Tesla is the dog on the S&P 500. I mean, my God, you're down 29%. Why? Because I think the sales of EVs are going. I keep them calling an automobile company. I think Elon hurt himself, with Twitter, and focus is gone. He's focusing on Twitter. He's got Tesla as a side issue, and he's not dealing with these issues. People in Tesla want him to deal with Tesla, not Twitter. And yeah, it's called X, I know. Let's take a look at some other ones, sectors. Industrials, we got way over here, Lockheed Martin and stuff, but look at Boeing. That's the other big bright red. Nothing but problems. I mean, the Calhoun, the CEO, is going to go. There's no way he can survive this year. I mean, JP Morgan up 10%. The banks are pretty good, solid. I mean, if you had Visa, you had MasterCard, you're doing. Energy, again, picking up as it goes up. Exxon's high. COPD, I keep on COPD is still down a little bit, but utilities are down, REITs are down. That's going to be expected until we get an interest rate cut. Then they'll light up. But remember, we're going to be diversified in there. Morgan Stanley, wealth management's down a little bit, and revenues are not hot, but they're still positive. I'm more scared of having like a Citibank or a Bank of America, where I'm not so sure how much commercial loans exposure they've got, versus where I know JP Morgan's not got a lot. So Disney's been a surprise. Netflix always is good, but these are areas, entertainment and stuff, and we consider Amazon entertainment because they got videos and movies and retail and everything else. So a little stolen in there. If we get into Walmart, look at this, 14%. You think it is a tech stock. So like I said, diversify, get the best in the best sectors. If the downcline hits, hopefully we'll be a lot less than everybody else. With that, thanks for putting up with me. I'll see you next week.